Castrol India is the next company that we are speaking with. Stock's done phenomenally well this year. But the performance in the second quarter was a bit muted. Low single-digit growth in revenue and profit margins were also kind of flattish. We have Mr. Sandeep Sangwan, Managing Director at Castrol India, to talk more about this. Mr. Sangwan, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. So Q1 has been, this quarter has been muted. Even H1 overall has not been all that great. Could you give us an indication of what we should expect for the full year in terms of volume and value growth, sir, FY25?
Yeah, first of all, I think thanks for having me on your channel, Prashant. And let me give you a perspective. I think we've delivered a 5% growth in revenue in the second quarter and a 3% rise in PBT on the back of continued investments in our brands. We launched the Shah Rukh Khan campaign on Castrol Edge. And if I also compare it to what we've done historically is our top line growth used to be in the region of 2-3%. And I think what we're trying to do is balance out top line growth and bottom line growth. And we're very happy with the top line growth, volume and revenue profile that we're building now. Okay, and our volumes have been pretty much in the same level as revenue growth. And the other thing is we continue to invest behind our brands, launch new products. For example, in second quarter, we launched Castrol Edge portfolio for SUVs, for hybrids and European cars. And this is the top performance product in our cars portfolio globally. So muted depends on which perspective you see it from. I think what we are focused on is now driving top line growth balanced with maintaining our margins. That's where we are.
So can you give us the exact number, Sandeep? What was the volume growth that you did in Q1? And for the rest of the fiscal, what is the kind of average volume growth that you are expecting?
So I think our volume has grown in the level of 5-6%. That's the core business, lubricants. And I think as far as the full year is concerned, we want to grow a couple of points ahead of the market. Okay, and this market grows at about 4-5%. And I don't know where the volume will end at the year end, but our intent is to drive top line growth through volume growth.
So you're saying that there is no scope of double-digit growth in the lubricants industry, not just for your own company, but even for the industry overall this year?
I think depends on where we play and where our competitors or other colleagues in the industry play. And I think we can get to double-digit growth levels, but a lot will depend on diversification also. But the core lubricants business will continue growing at about 5-6%. That's our outlook. And if we can beat that category growth and then add on some revenues on top from playing in adjacencies, I think that can get us to a much higher volume growth profile. Just to share an example, we've launched auto care range of products last year, which are now available in 45,000 outlets. We're trying to scale that business. We've got good response. We have a portfolio of 5-6 products in that auto care range now, which will continue building. So there are additional levers of growth which will come in as we look at the future.
Okay, all right. Hi, Sandeep. You briefly mentioned that Shah Rukh Khan's on board as well. That would mean higher advertising spends. So as a percentage of sales, what was it? And where does it settle at for the coming year? And putting that into context, what does it do to margins? 22 to 25% is what you've been talking about. Will you be closer to the lower or the higher end of it?
So let me start with margins first. We've maintained our margins at about 23% in the second quarter also. And what we said is in some quarters it's been 22 in 23, but we are able to maintain those margins at 23-24% levels. Okay, that's one thing. Yes, advertisement expenses will be higher, and they've been higher by about 16% in the first half of this year. But that's a part of the strategy. It's not something that we want to give up. Typically, we invest about 4 to 5% of our revenue in our brand investments, and that will continue going forward. If anything, we may continue investing more. But Castrol has been built. It's a brand which is loved by Indian consumers and customers for more than 115 years in the country. And we have all the intent to continue building that brand, supported with innovation by bringing new products for our customers and consumers.
Okay, all right. Sandeep, the street got very, very excited about the data center opportunity. We had the management of Gulf Oil who said, given the entire matrix and the entire pie, it's not such a big opportunity. Though the stock market is quite bullish that Castrol has a big opportunity out there. Could you give us your reading of this? How big is the data center opportunity for a company like Castrol, and how do you look at scaling that up?
Yeah, so I think let me touch on that. First of all, we've called out globally, data center thermal management is a big play for Castrol. And globally, we're investing about 500 crores. That was announced in R&D facilities in our parent company in UK, to which we have access. The way we see it is data center market is going to grow, in India and globally also. It's a function of what cooling technologies data centers adopt. Right now, most of the data centers use something called air cooling or HVAC systems, traditional systems. But I think as the computing power demand grows and we need faster processors, cooling requirements will grow. And Castrol as R&D, we are investing in technologies like immersion cooling, which can give us opportunities in that space. So that's where I think it's still in development stages. We have certain tests running with customers. We've tied up with global players in data centers who design and develop data centers. So we see this as an opportunity area, and that's the perspective we're coming from.
Mr. Sangwan, so you're saying that the parent already has a product, is it?
Yeah, we have liquid cooling products for data centers, which are already available. Yeah, for immersion.
And this is already being used, immersion cooling? Your product is already in use?
So we're working with some of the big data center players in terms of testing and piloting these. I cannot say anything more than that, but we have a data center cooling product which is available.
Because in India, the market is about only 1,000 megawatt, right? I mean, it's expected to grow rapidly because a lot of capacity, etc., is coming. A lot of big players, conglomerates, etc., are coming in very fast. But this is are you saying this is in testing stage or this is a settled technology now? I mean, it's much more efficient than air cooling.
Yeah, it is much more efficient because the energy consumption is much lower and is far more efficient in terms of space utilization also. But as I said, we're doing testing with some of the big customers, and we want to continue developing this further.
By when can we see the technology? You said you have access to this. By when can you get that technology here in Castrol? I mean, for Castrol? Yeah.
So I think as we kind of further proof of concepts get verified, depending on customer requirements and customer businesses, we will be able to bring it in. I think to say which time is very difficult for me. I think it again depends on how the tests and various programs that we have with customers develop over the next few months and years.
You know, we had the Gulf Oil management and they gave us the total, I mean, in terms of volumes, right? If you project data center capacity, it's say 2,000 megawatt. I mean, you say all of it becomes this immersion technology. Even then, as a percentage of total volume sold, it is minuscule. But I don't know if that is the right way to look at it. I just wanted your perspective. Could it be a high margin product? So it's in terms of share of volume, it could be low, but share of profit could be high. I don't know what the internal thinking is, Mr. Sangwan.
So first of all, I think you keep referring to Gulf. It's their view, and I wouldn't like to comment on that. It's for them to judge. As far as we are concerned, we've called it out globally as one of our plays for the future, and we believe in this and will continue working on this as an opportunity area.
Okay, we'd love to get more details as you're not ready to share those with us. So maybe next time, and we'll have more updates on this one. Really appreciate it, answering and taking all those questions. Thank you very much for joining us, Mr. Sangwan. And good luck for the underlying business as well as you go through the rest of the financial year. We'll take a